So your week ahead in FX, we've of course closed out the week with this very interesting UK election result, and the follow-on action in sterling next week is going to be critical. We had plenty of two-way activity in sterling after the initial dump, and you have to wonder if May is able to stumble through and maintain some sort of government, even if it's working with the small party. Whether we have any sort of net new information on sterling going into those Brexit negotiations, I guess that is the sort of the bullish, if you will, potential for sterling, is that because we don't really have new information, maybe uncertainty is not enough to drive it lower. Our sort of default position here, as long as we're not reversing hard on sterling, is that there could be some downside risks, but we're going to need to see how the price action shapes up early next week. Otherwise, plenty going on as well. With Europe, we have perhaps three event risks or things to take note of. Over the weekend, the first round of French elections, this amazing rise of Emmanuel Macron, his brand new party, which is expected to get an absolute majority in the legislature. This is very positive, we think, for the potential for the French economy, and could also lead to some euro resilience in general going forward. So we'll be watching that closely. Of course, it is the first round. We need to see the subsequent round next week, but it looks like he's going to get that majority. Second, there are no dates on this, but this attempt to get a new Italian electoral law called that would raise the threshold for representation has failed, and now there's a lot of clamoring for snap elections. So keep that on your radar. Italy to us is the big sort of existential threat to the EU that needs to be addressed. France never really was. Finally, there is an EcoFin meeting next week, and we should be seeing more news on whether Greece is going to make the progress towards that, towards a debt deal. And we're looking for whether Greece ever gets the terms of its debt reduced and the involvement of the IMF related to that factor of the whole situation. So watch that as well. You know, there's always potential for trouble. It usually ends up being, of course, slipped under the rug and sort of limped forward again on this these sort of serial aggravations of the Greek debt situation. Finally, it is FOMC week next week. FOMC meetings can often be pivotal. This one looks pretty pivotal because the market has gotten really dovish on the FOMC expectations, has gotten very negative on the dollar. We're seeing some signs of momentum divergence on dollar charts. Euro dollar, for example, if it sells off much more. But especially dollar yen will be sensitive to the moves in interest rates next week. And here late on Friday, it is pushing up through the key pivot area, 110 to 110.50, that it broke on the way down. So if we see that the market has overshot its expectations for Fed dovishness, if the sort of dovish hike, if you will, is not so dovish in terms of the forward guidance, and it's a bit more flexible in two-way, and we see U.S. interest rates continuing to back up. We also established new lows recently that look like they're failing in the 10-year yields. This could lead to a generally resilient dollar across the board, but especially I think dollar yen will be sensitive there, though also maybe the dollar and some of the emerging market and commodity currencies as well. So I think there's going to be plenty going on next week. Let's stay on our toes as we look forward to the bevy of event risks.